Welcome to Behind the Money, the show where we talk about some of the most interesting public companies and people. I'm your host, Morris Willie. Today, we're talking about the unfortunate bankruptcy of Rite Aid and what could be next for the company, and 3 stocks that you might want to look out for if they're in your portfolio because they too could be facing bankruptcy soon. First though, let's get a quick history of the Rite Aid company. Rite Aid's story begins in 1962 when Alex Grass founded the company in Scranton, Pennsylvania. It started as a single health and beauty store, and over the years it rapidly expanded, becoming one of the largest pharmacy chains in the United States. Rite Aid was a go-to destination for prescriptions, health products, and everyday essentials. Rite Aid enjoyed substantial growth in the 80s and 90s, fueled by acquisitions and strategic expansion. However, this rapid growth eventually led to financial issues. In the early 2000s, Rite Aid faced a financial scandal with executives accused of overstating earnings. The company's stock price plummeted and struggled to recover, which from this point it never really has. In response to these challenges, Rite Aid underwent a series of restructuring efforts. This included the sale of non-core assets, store closures, and an aggressive cost-cutting campaign. Despite these efforts, the company continued to grapple with a heavy debt load. The retail pharmacy landscape was evolving. Rite Aid faced fierce competition from industry giants like CVS and Walgreens. These competitors had deep pockets and larger footprints. Rite Aid found it challenging to keep up. In the years that followed, Rite Aid continued to experience a roller coaster ride. While there were moments of resurgence, it's remained difficult for the company to fully regain its footing. The challenge of serving its debt while competing in the crowded pharmacy sector has proved to be an ongoing obstacle. That's led us to recent headlines. On October 15th, the company had filed for Chapter 11 bankruptcy. The company stated that going through this bankruptcy will help significantly reduce the company's debt while helping to resolve litigation claims in an equitable manner. Going off of that statement though, the company is also facing an opioid-related lawsuit, or multiple actually, so it's going to be interesting to see how those play out now that the company has filed for Chapter 11 bankruptcy. Now here's the potential messed up part. As I said earlier, the company has had a roller coaster ride, and the share price has never fully recovered. At this point, it's sitting at a market cap of around $12 million. At its peak in the late 90s, early 2000s, the company had a market cap of over $2 billion, near $3 billion at that point. And now, sitting at $12 million, the market cap has dropped over 99%. Safe to say, if you had any money in Rite Aid and you were holding it long term, that money is pretty much completely gone at this point. And I know what some may be thinking, could this be a potential investment opportunity? The company does still trade on the OTC market, currently at 20 cents. But that might not be the best idea. Under the Chapter 11 bankruptcy, shareholders are in a Class 9, and that pretty much means that they're not allowed to vote on the plan to restructure the company. And in some cases, they could end up canceling out shareholders, and all your equity you would have within Rite Aid would be wiped out. So with the potential chance of shares getting canceled out, it's definitely not a great idea to invest into Rite Aid. Now, that said, here are 3 other stocks that you might want to avoid. While watching Behind the Money, remember, this isn't financial advice and shouldn't be taken as financial advice. This is only for entertainment purposes only. Now, back to the video. First, we have WeWorks. Going public as a SPAC a couple years ago, WeWork has not seen the best results. Its stock has dropped more than 97% this year alone, and what's even more concerning is that its missed interest payments and its bonds are selling for near pennies on the dollar. Another thing to note here is that WeWork has long-term leases on their office spaces, but given the economic climate, they're not showing much of an edge against competition. So this all leads to a possible chance of bankruptcy for the company. Just something to look out for. Next up is Mullen Automotive. I talked about Mullen way back, maybe even a year or so ago now, but it was a major meme stock, but the company hasn't done much. As with many EV companies, it's pretty much nothing more than a startup with lackluster revenue. The company had $308,000 in revenue from the last quarter with a hefty loss of $53.8 million. The company has relied on a lot of diluting to shareholders, so if they can issue more shares, it's easy to say that they'll probably be filing for bankruptcy sometime in the future. And finally, something that came to my surprise, Big Lots. The company has been having trouble with keeping their profit margins up, managing inventory, and as they've had a shift towards furniture, one of their main furniture suppliers has shut down. So it's something to keep on your radar. I actually got these 3 suggestions from an article from Investor Place, so I'm going to be sure to link that down below if you want to check out all 7 that they recommended. Let me know your thoughts below about the Rite Aid situation and these 3 companies, or any more that you see on the horizon that could be potentially filing for bankruptcy. And thank you for watching Behind the Money.